Welcome to another real-time trade. In this video, I'll discuss several ways to manage the trade to empower you to design a trade management model that suits your unique mental wiring. This is the stuff of the real game. Now let's join the trade in progress. Hey guys, Czar here. Good morning to you. Hope all is well. Happy Friday. It's 9:33 a.m. on Friday, November the 10th. It's the 10th today. Double digits already. Wow. Time is flying. Watching this now, we've had a big run up here in the pre-market, guys, on all three indices, as you can see here. Let me just scroll out so you can see that much more clearly. See that big rally right through, and slamming him up into 2.5 standard deviations on all three, and now selling off here on the opening four candles, call it. We're 4 minutes in. And NASDAQ actually holding up fairly well here, as you can see, but dropping on the S&P and on the Dow. Let's pull back to the trading grid, shall we? You can see that run up here in the European session. This is 30-minute chart. So these are 1, 2, 3, 4, 5, 6. And we're into the 7th 30-minute candle in a row that are white. In other words, bullish candles. We had a nice zone break opportunity here in the pre-market, but I wasn't interested given the time of day. And sent that notification to my group. And then S&P, let's take a look at that too, shall we? Very, very similar. A nice penetrating here candle, a nice top wick, bottom wick, and then break above. But again, going into the open, you can see now we're not getting that follow through. Just a little too dangerous for me to take there if I'm expecting a good, 2R model playing out there. So we'll see that. How that goes. The Dow, same sort of thing. Now erased all of that zone break move now from the pre-market. We're watching these guys. I'm going to cut out dead air, sideways grinding action, non-teaching moments, things of that nature. Keep this video nice and tight, and I'll bring you back as things develop here. Just one more quick snapshot on the three sisters here, the 1 minute chart. Volume weighted average price, 2.5 standard deviations, pulling back all the way now, looking like we want to touch VWAP on the Dow and probably on the S&P as well. On pause now, and I'll bring you back. All right, guys, sell stop right here. Stop above. On the Dow. Interesting trade. I'm going to explain it to you in a moment here. Sell stop. So I'm not in this. Price needs to drop and break down below that white line in order to get triggered in here. This is a contracting pattern. So far. I'm shorting the weakest of the three sisters here, guys, just so you know. NASDAQ actually looking pretty darn strong here, but had a really big run up all the way through here. Likely getting a bit tired here. We often see this kind of move for the first 10 minutes of the open, and now likely to wane. Double topping here with a small penetration. That's fine on the S&P, and then the Dow failing miserably to get to the prior high after the big rally here this morning in the pre-market. So now, if we get a failure here, I'm fairly confident we can get 2R out of this based on that. Here we go, and I'm in, guys, right there, triggered in. Triggered in, and my confidence extends only to the point of random market behavior, right? It's not an incredible I know what I'm doing kind of confidence where this is bound to happen just because I think it should, not even remotely. I'm talking about a confidence in a coin toss that is weighted over time. That's all. But even a weighted coin, in other words, a coin that's weighted towards heads based on a long-term edge, can still land on tails. randomly. And random in this context simply means uncertain or unknown outcome. It doesn't mean anything wild can happen. It means over time it's likely to land on heads more often because it is weighted based on a proven edge, which can be a hedge against losses. Coin's been tossed. I'll bring you back. All right, guys, we're back, and we have news in less than 1 minute. It is red folder news by some providers, but it's not one that I've seen massive swings on typically, like PPI, CPI, inflation data, interest rates, things of that nature. So I'm going to stay in this trade, and my stop will remain where it is, and it's certainly for the models purpose as well here, tracking the 4 different models. But this the news will be released in 30 seconds now. So we'll hang out for that and see what happens here. And I'll explain the trade. 5 seconds to news. And now. Target 1 has been hit. Let's see if we can slice down and get some of the other ones here as well. And target 2 has been hit. The 1.5 hour all or nothing trader has also left the game with full profitability, as did the 1 hour. If you remember, just being patient here, sorting out the fallout from the news. I don't even know what the news is, quite frankly. I mean, I know what the release is, but not what the actual numbers are. And it's not something I really care too much about. I'm just trading candles, reactions to news, not the actual substance of the news. All right, guys, while we're waiting for this to play out, just to explain the trade, this is kind of a combination feel of a trend continuation and a zone reversal. I'll explain what I mean by that. But first and foremost is a big picture daily context. This is very important. As you know, the last couple of days we've been trading here based on this double top on the Dow in particular here. Very important double top after this gigantic V bottom and an entire week and a half of rallying, almost unprecedented in history, as a matter of fact, from the current structural positioning. You rarely see what we saw here, and then rounding over here and beginning to fail. Of course, yesterday was a down day, as was the day before. A down day in terms of body color the day before, but we hadn't broken the previous day's low. We did yesterday very handily, and then could fail to rally higher here earlier in Europe or in the opening of New York. And of course, we're still very much in the opening. It's 10:09 right now. The market opens at 9:30. So we have the context here of this double top and weakening technicals and price action on all 3 sisters, by the way. I won't show you those yet. But then we had this big rally going on into almost a measured move of this prior rally that we had in Asia, and then this pullback in early to mid Europe, and then a big rally, extended rally here into 2.5 standard deviations on VWAP, which I'll show you in a moment. And then we opened on New York, had a quick piercing of the high, and then rejected down, and this is when things get really interesting. So you see the rejection down here on the 1 minute chart, right? Quick pop on the open, and then boom, boom, 2 topping tails or wicks, and then breaking down. A big shift move here, and then a failure to make a new high, that contracting pattern that I referred to, and then this break of minor structure here below 2 EMAs with a negative moving average configuration. But why did I take that there? Well, let's go back to the 3 sisters, and we saw what happened here too. So very big again, as I mentioned in the beginning, these giant rallies here through the pre-New York, right? This is a 1 minute chart, pre-New York, NASDAQ, S&P, and the Dow, all 3 of them. And then again on the open with a little bit of a blip down on the NASDAQ, a significant sell-off here on the open, saying, you know, I want to go lower from here. I want to do some profit taking here on the S&P, and the same thing here on the Dow, or similar thing on the Dow. The Dow actually hit VWAP, right? It actually came all the way back to VWAP in here. But you'll notice what happened here, though. Even though the NASDAQ was rallying higher, the S&P failed to make a new high. It just pierced it marginally. It's called a 2B reversal, based on Victor Sperandeo's 1980s and 1970s work, and it's a great little pattern. But a piercing, taking some liquidity, and then dropping. But a failure. So the Dow was significantly weaker with its structure here, failing to even come close to meeting its prior high, and then that breakdown here below the EMAs. So taking the weakest of the three, having had this massive rally up here in the pre-market, to fade into what we talked about here on the daily context. Hopefully that makes some sense. So why is it a trend continuation? Well, let's go over to the 30-minute and let me show you. Trend continuation is here. Oops, that's not the 30-minute. This is the 30-minute. Remember yesterday? Impulse down, corrective up, impulse down, very strong. Corrective up, impulse down, failure to reach a new low. Then we got this bullish move again into the New York Open, and then it's failing. Well, we take out the zigzags here, right? So this is a zigzag impulse down, a zigzag corrective up. But notice that we're not even remotely close to the high of this leg here, this impulse leg. As a matter of fact, if you put on some Fibonacci ratios here, you probably get something fairly interesting. Yes, we do. So it's 618 right there, and then the failing here on the open. New participants. Now remember, New York participants coming in here, bearish bias. New York participants yesterday, bearish bias. New York participants coming in here, bearish bias. Starting to see a pattern. Selling on the New York Open, selling on the New York Open, selling on the New York Open. And that's what we're playing into here. So a number of factors coming together here. I'm going to call this probably going to call it a trend continuation. No, I'll call it a zone break, a zone reversal trend continuation. It's a little bit of a hybrid of both. And so this zone, of course, reversal, this wasn't a zone here. We were in the middle. If you remember, my zones were actually here with an arrow showing clean traffic zone. I revised this based on the double topping here on the open, like I did yesterday, right there, remember? And the day before on the New York Open. Put you back on pause, guys, and we will follow this up. And we did it, guys. Finally, 86 points, target 3, which is 2R. And so the 2R all or nothing trader, of course, has left the game. All 4 models are fully profitable. Took a while to play out. This is still a 1-minute chart. I didn't have to go up the scale to reduce the number of candles, but getting pretty darn close. Entered this trade at around 9:46, so after my 10-minute window where I typically don't trade. Sometimes I do, but it's very, very rare. And again, the guy's very much a daily context, double top here, big double top, very important. Down momentum here for the last couple of days. And then the consistent selling at the New York Open. You see that there? That again is today. This is yesterday selling. This is the day before selling, and so on and so forth. That's been the pattern for the last few sessions. And we're just seeing more of that, of course, today. This is a zone reversal trend continuation, TCON zone reversal. Hopefully that makes sense. Have an amazing day, guys. I'm sure we'll see you again a little bit later. Happy Friday to you, and we'll talk soon. Take care.